Happy Hump Day, traders, and welcome to the London Forex Broadsheet's daily video wrap of the markets for Wednesday, July 16th. The euro was supported after a Eurostat report showed inflation in Europe accelerated to 4% in the year to June, the highest in more than 16 years, and 0.3 percentage points above May's 3.7% yearly inflation rate. Traders had been betting the euro would continue to rise on the back of Federal Reserve Chairman Ben Bernanke's assessment that the risks to U.S. growth had increased as the housing and banking sectors continued to weaken, which was interpreted as meaning that there would be little chance to see borrowing increase before 2009. The euro-oil correlation, which traders have speculated is due in large part to quantitative trading programs, and this remained in force as the price of crude oil fell over $6 during the New York session in tandem with the euro's decline. The reversal followed through from the setups that we covered yesterday, and it now looks as though the technical retracement will leave a swing point at 1.6030. The 5850, 5800, and 5650 will also be areas to monitor. Looking at the chart and working with the law of probability, we could now see a test of 5300 if oil prices continue their pullback. The pound reached its highest level against the dollar since March 26 on Tuesday after the Office for National Statistics said the UK CPI rose 3.8% in the year to June. This is the highest rate since official records began in 1997, but support for sterling faded in New York on the Wells Fargo profit report, which accelerated U.S. inflation and a better-than-expected report on industrial production and capacity utilization. The cable found support near the LFB support 1 at 1.9917, and a daily close below $2 threatens a break of that level. Also threatening the pound was a report from the Office for National Statistics which said claims for jobless benefits climbed for a fifth month, increasing 15,500 from May, the most since the 1992 recession. We still have a long trend line that is in place from the last failure at 98.50, and it looks very much as though it will now come into play in the next week or so. That is, unless we get a heavy amount of positive UK-based data. If 98.50 goes, we are looking at 9600, and in reality that is where the pound looked comfortable from day to day. There are no economics of note to come this week from the UK, so that leaves things to run on sentiment. The Aussie came within 150 pips of parity on Tuesday, but weakened once sentiment about the banking sector changed on the Wells Fargo profit report and the FOMC minutes revealed a more hawkish tone among members. Initial support was found in the 97.30 area, so a break below there could signal a further downside move towards 9700. Looks as though the Aussie is getting dragged lower by market momentum from the highs of Monday and Tuesday, and now those resistant breakout points will become resistance, starting with a test of 9700 tonight. This will be another sentiment and momentum play because the calendar is very quiet for the rest of the week on the Aussie. Look to the best price moves to come in late Asian and early European sessions. The loonie did manage to beat parity by about 25 pips on Tuesday, but rose after oil's $6 per barrel fall. On Wednesday, after oil fell again, the CAD was finding support at the LFB pivot at 1.0020, which, if maintained on the daily close, could set a move up towards the LFB R1 at 1.0066. The pair broke the lower band on the daily chart channel in trade this week, and then failed to really follow through. We now can see that a swing point may have formed on the pair, and can also see that 1.0080 and 1.0180 will be areas to break back higher through. The moves will be led by the equity markets. If they are green overnight, then look for that technical long test as the dollar index picks up buyers. The Swissy unsurprisingly rose on the flight from quality during Wednesday's equity market boost on the Wells Fargo Quarter 2 profit report. A sustained equity market rally over the next few days, if seen, sets up the Swissy to rise past its tightly grouped 20, 50, and 100-day moving averages. This is the most reactive of the major pairs to the movements of the US dollar, and as such we are likely to see it get pulled higher if Japanese and European equity markets go up, and by doing so drag the Treasury yields higher with it. Big picture targets are 350 and 500. The yen is forming a bullish pin bar towards the close of Wednesday's New York session, and a move up in equity futures, if seen during the Asian and European sessions, could see the pair challenge the 50-day moving average at 105.50. It would seem that the swing point is in place. The commentary from yesterday has followed through and left the pair bouncing today off the 100-day simple moving average at 104. Now to retrace the moves back towards the 200-day SMA at 107.50. It will need positive equity markets and oil to hold lower, and that may be just what we get this week. On the upcoming economic calendar, we have the ZOO report from Switzerland, and that is the only economic release from Europe overnight, and that will allow a run based on sentiment. The Canadian monetary report may garner some interest, as may the U.S. housing starts, but in reality, the upcoming sessions are going to be run on momentum of the dollar index bouncing off of the 71.50 area. In the Asian equity markets, Asian stocks fell, led by energy and mining companies after crude oil and metal prices slumped on concern of slowing growth that will hurt profits. European stocks rebounded from a 3-year low after a drop in oil prices boosted earnings prospects for car makers and airlines. Europe's Dow Jones Stock 600 index added 0.8% to 268.50, trimming its decline this year to only 26%. On Wall Street today, the S&P 500 added 30 points or 2.5% to 1245, rebounding from its lowest level since 2005 with its steepest gain since April. The Dow Jones Industrial Average climbed 276 points or 2.5% to 11,239, while the Nasdaq Composite Index increased 69 points or 3.1% to 2284. 4 stocks rose for each one that fell on the New York Stock Exchange today. Overall, concerns that mounting credit losses will create a banking crisis, along with the growing perception that the government's plans to backstop Fannie Mae and Freddie Mac will widen the budget deficit and increase the money supply, took a backseat during the New York trading session, as better-than-expected profit report from Wells Fargo, along with news the company would raise its dividend by 10%, helped the dollar gain against a basket of the most widely traded currencies as the Dow and S&P advanced while oil and gold fell. A further boost was provided to the dollar after the FOMC minutes from the June meeting revealed that an increase in the benchmark U.S. lending rate would be appropriate very soon.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.